Telecoms giant MTN has delivered marginally improved revenue in the first half of the year to the end of June. The company pointed to increased pressure from load shedding in its South African market as one of the drawbacks during the first half of the year, as South African service revenue improved by a slim 1.9% to 20.4 billion rands. In Nigeria, MTN's biggest market, service revenue went up 24% from 35 to 43.5 billion rands. CEO Ralph Mupita says the group achieved a solid performance in a challenging operating environment, and he joins us now to give us more on the firm's results. Ralph, thank you as always for joining us, and once again, load shedding is the big story in these results, again nearly tripling from what we saw last year, around 68 days in the first 6 months of the year, to 181 days in the first 6 months of this year. How much of this subdued performance in South Africa has had on the MTN group as the power cuts are not stopping?
Yeah, thanks very much for having me on the program, and very good evening to your listeners. Yeah, we were very pleased with the progress in terms of the overall performance of the group in the period, as you intimated. In South Africa specifically, it was a tale of two quarters. We saw actually revenue start to accelerate in Q2, the second quarter of the year. Q1 was very challenging, and as you mentioned, load shedding has had impact in terms of the network availability, as well as putting pressure on costs. We've had to invest quite a substantial proportion of the capital investment that we made in the period, 4.1 billion. Quite a bit of it actually went into upgrading sites for power as well as security. But what we're encouraged about, Xolani, is that where we've upgraded the sites for both power and enhanced security, we've actually seen network availability being restored to the levels that we would like to see our network, i.e. 99% network availability. At the end of June, we were at 91. So, and that's been very pleasing progress. And as we go into the second half of the year and continue with our investment, we think that as we get to the end of the year, the network will look pretty much like pre the load shedding days. So yes, it's been challenging, but we feel very encouraged with the progress that we've made.
Ralph, many JSE-listed companies have struggled in West Africa in particular, and Nigeria being one of the countries where we've seen a lot of JSE-listed companies pulling out from South Africa. You have survived and are now thriving, in particular in Nigeria, which is, of course, your biggest market. It's been a tough market for MTN and others. And the results today, though, show that there's been a turnaround. With this latest results, they show that you may have turned a corner in Nigeria with some great results.
Yeah, Nigeria is a big part of the group. Depending on how you look at it, up to 40% of the group derives its value for Nigeria. So Nigeria is actually pretty core to the company. And, the macroeconomic environment actually has been challenging in the first half. We did have a cash crunch at the time where the Naira the currency was redesigned, and it did impact our performance in the first quarter of the year. But we've seen an acceleration in Q2 of overall service revenue relative to what we'd experienced in Q1. So the business is operating very strongly. As you say, service revenue as well as EBITDA margins at the end of the half of the year, are all pretty much in line with the expected guidance. We are, however, cautioning that the second half in Nigeria financially will be much tougher. The Naira has devalued by over 60% in June. So the effect of that devaluation, we'll see it fully in the second half. So there is some short-term pains at the financial level in Nigeria in the next 2 or 3 quarters. But the reforms that have been made in Nigeria for us are medium to long-term, very, very constructive. The removal of the fuel subsidy, normalizing of exchange rates to the INE window, those are all, positive signs that should be very supportive for Nigeria's investment case and therefore also MTN's investment case.
Some really good news here. If I look at it from my side, the sale of a stake. You've sold your stake in the Fintech mobile unit for $5.2 billion to MasterCard. And this is an area where you diversified because there's a need when it comes to mobile money. What are the reasons for this particular sale, and how is the deal structured here on?
Yeah, just to be precise about the partnership that we've entered into with MasterCard. So we have signed definitive agreements on the commercial side focused on driving fintech in the payments and remittance areas. These are two verticals that we think, over the medium to longer term are going to be, forms that individuals and businesses will transact and need solutions over and beyond what banks provide today. So the commercial agreements are in remittance and in the payments area. And the agreements are really about issuance, acceptance, as well as broader a remittance partnership that we want to launch with them in the next couple of quarters. So that's the commercial agreement. We've also entered into an MOU for them to acquire a stake at an enterprise valuation of 5.2. So they're not paying us 5.2, but the value of the business is $5.2 billion equivalent, and they will buy a stake. So that process needs to get to completion. So it's not being completed, but we have completed the DD process, and we're now going through kind of the closing. So in the near term, we will announce how much they actually have invested at that valuation level. So important for the listeners, to understand that it's the valuation of the MTN Group FinTech business on a cash and debt-free basis.
Great. Something else has come up with the two undersea cables that have snapped. That there's a worry in South Africa right now that there will be a problem with our internet speeds, with the connectivity, as the two undersea cables have snapped. I believe that yourself and others are working hard as MTN to make sure that the impact is not felt. What is the status so far there in terms of the work that you're doing, and what could the impact be to the internet services in South Africa?
Subsea cables, unfortunately, from time to time do get cuts, and the consortia who own and operate these subsea cables, work quickly to restore services. So if there's been a cut, it does actually slow down connectivity. Often there is redundancy built into these subsea cables. If you look at historic incidents, these have been repaired, very, very quickly after a period of time where the connectivity was not as optimal as it should be. So, if that's anything to go by, you'll see, these subsea cables that have been cut, restored to full functionality.
Ralph, you've already mentioned a little bit about the second half of the year, that you expect it to be quite a tough one. The first half has been quite resilient, but what's your outlook economically when you look at the country's performance as well as MTN? What's going to be the things that stand out around how your financial performance is viewed at the year's end?
Yeah, I think there are a couple of dimensions that would influence how, the results will look like, in terms of macro factors, not our factors, but more the macro. I think the geopolitical context of ongoing war in Ukraine, there are second order effects that are pretty outsized in our markets, sub-Saharan Africa, i.e., inflation remaining elevated in many of our markets. Elevated inflation puts pressure on the consumer and also increases the cost to operate. So I think that's the one issue we need to navigate. The second is really around regulatory developments. There's some regulatory developments across our markets In South Africa, we'll need to navigate the ECA bill that's under discussion. There are also developments around SIM registration that we are working through in several of our markets. So the regulatory context will also have an impact on our business. And finally, exchange rates. Exchange rates for the Naira, I think, will have a pretty material impact in terms of our financial profile. The exchange rate has repriced and has been somewhere in the region of 760 or thereabouts, over the last couple of weeks, if you average it out. And the question, where does it go? Does it stay where it is? Does it weaken? Does it strengthen? There are those kind of uncertainties. And the rand has also been relatively a bit more volatile. We've seen the rand, move towards the 20s. There was a time when the beginning of the year that some of the banks had the rand ending at 14.90 odd. I think it's going to be very tough to find the rand retracing, all the way back to 14. So exchange rates will also affect. Us at MTN, we understand that we need to navigate within that context. We're very focused on executing on our strategy and the things that we can control. But we do anticipate, the second half will be tougher. And the other factor, to contend will be load shedding. But our resilience plan is in implementation, and we're very encouraged by the results we're yielding.
Briefly, before I let you go, Ralph, let's talk about some good news as well. You've been trying to get rid of your business as MTN in Afghanistan. Now you have an unconditional go-ahead to sell that business. You've already sold the businesses in Yemen and other Middle Eastern countries, but we still have Iran still there in terms of trying to divest from Iran. What is happening around Afghanistan, though? What's the next step from now?
I think to be clear in terms of our Middle East approach, we said we wanted to simplify the business and exit the consolidated subsidiaries. So this was, as you said, Syria, Yemen, and Afghanistan. We're making very good progress in Afghanistan. It's taken us a bit of time, but we wanted to have an orderly exit where we pass on our business to another entity that can look after our 6 million customers. And we received ATRA approval, and the conditionality there is the submission of documentation to the relevant authorities in Afghanistan. So that's progressing, and on conclusion, we'll have exited the consolidated subsidiaries. On Iran, we've said that, it's a market that we're managing for value. What we did announce in today's results was that we are exploring an IPO, a primary issuance of potentially 7 to 10% of the company as part of the regulatory requirements in the country. But that's at the very early stages. So, Iran continued to manage for value, but, proceeding ahead with exiting the consolidated Middle East markets, of which the last one now is Afghanistan.
Ralph Mupita is the Group CEO at MTN. Thank you very much for your time.